Welcome, everybody. I'm Rick Edelman. Thanks for joining us for this webinar, Bitcoin, Ethereum, or both. We're going to show you how to make an informed crypto allocation decision. I'm really glad you're with us today and helping us figure all this out. I'm very happy to welcome on to this webinar, David Alderman. David is research analyst at Franklin Templeton Digital Assets. David, great to have you with me here today. David's been doing this for quite a number of years. The world of crypto is still pretty new, and David's been doing this for years now. David, you've been relatively new. You're a lot younger than me, but we're both a lot younger than Franklin Templeton. So, although they're pretty much a household name in the financial services industry, give us a minute or two about Franklin Templeton Digital Assets, particularly.
Franklin Templeton Digital Assets is broken into the three different pillars you see here. Two are on the more of the building side. We have technology, which you can think of as like, say, tokenization. We have our own tokenized money market fund and a lot of resources going into that. And then node ops, where we run nodes on a bunch of different of the decentralized networks that are out there, like Ethereum, Solana, etc. Where I sit is within the investment strategies group. And within there, we have our own early stage crypto venture fund that does early stage Series A investments. And then we also run strategies that are, both more beta or say discretionary strategies to capture, the purely the more liquid, like large cap crypto assets, such as Bitcoin or Ethereum.
So it's really, I find fascinating. Franklin Templeton, 75 years old, 1.3 trillion in assets globally, one of the biggest, oldest, best known names in the industry, built its reputation in the bond market back in the 1980s. And yet Franklin Templeton has become one of the unheralded leaders in the crypto space, in the digital assets environment. Jenny Johnson, your CEO, is very deep in this space. I find it really fascinating that a lot of folks don't realize how deep Franklin Templeton is. You briefly mentioned the on-chain money market fund, Benji. Most folks have no idea that you've got a couple of $100 million in an asset with the first on-chain money market fund.
I think we surpassed like 400 million this past month or so, and we're expanding on. We started on Stellar, we're expanding on a bunch of different other networks too. So it's that's like a really exciting piece, and I think that side is also what really informed why we started, say, the investment unit, because if you can believe there's a lot of value in being on tokenization, you can see a lot of reasons to own certain crypto assets.
And so you're really a perfect individual to be talking with us about this fundamental question. Now that we have a Bitcoin ETF available in the marketplace, started back in January, and now the new Ethereum ETFs available as well, it's raising the fundamental question among investment advisors and investors alike. Which one should I choose? Should I choose the Bitcoin or should I choose the Ethereum, or should I do them both? And if so, in what combination? That's what we're going to really tackle today. And I want to let you know, as a participant, if many of you have already submitted questions to us in advance, and I'm going to pepper David with those as we chat over the next hour. And as you're listening to this, if you have additional questions, go into the Q&A box here on Zoom and type in your question, and I'll be curating those as well and giving them to David as we go along, tackling as many of these as we can. I think that the first thing we ought to do, David, is really just start at the beginning. I think a lot of investors, a lot of advisors still really can't even explain the difference between Bitcoin and Ethereum. So why don't we start there? Let me try to tackle the answer to that fundamental first question for you so that we're not wasting your time. The fundamental difference between Bitcoin and Ethereum. Bitcoin itself, the very first digital asset, as we know, when Satoshi Nakamoto, the inventor of blockchain technology and Bitcoin, first invented Bitcoin, Satoshi's goal was for Bitcoin to be a replacement currency to eliminate the need for the dollar and the yen and the euro and so on. That experiment has failed. I think we can all agree that Bitcoin is not going to serve as a currency for the fundamental reason that Bitcoin is very volatile. And if there's one thing we all want out of our currency, it's stability of value. We want to know that a dollar is a dollar is a dollar. And Bitcoin's volatility on a moment by moment basis is a bit of a challenge. So Bitcoin serves as today a store of value. Its volatility works to its advantage, just like stock market volatility, real estate volatility, bond market volatility. People buy these assets because it's a place they can hold their money, and they anticipate that the value of that asset will rise over time. So Bitcoin has proven itself to be a pretty effective store of value. Ethereum, however, was invented because Bitcoin has one fundamental problem, and that is the fact that Bitcoin is dumb money. In other words, it's a good store of value, and you can transfer it from one person to another. The problem is if I transfer my Bitcoin to you, you receive it. You receive it instantly, but I might not want you to. I might want you to get my Bitcoin only after you do something for me, or only after something happens. For example, if the weather hits a certain temperature, or it rains, or certain team wins the game this weekend, or some other event. An if then contract. Only if you send me concert tickets do you get my money. With Bitcoin, I can't program that, but with Ethereum, I can. Ethereum is known as smart money or smart contracts, programmable money. It allows me to put into the code the condition on which you receive my money. This makes it very useful in commerce because businesses operate under contracts all the time. And that's the fundamental difference between Bitcoin and Ethereum. Bitcoin is a store of value, and Ethereum allows for the commercial application for the transfer of money as part of business operations. So I've answered the question, the difference between Bitcoin and Ethereum. You heard part of that, I believe, that Bitcoin is a store of value. Ethereum is smart contracts, enables the facilitation of commercial activity. Talk about the difference in performance between the two. Bitcoin's been around since '09, Ethereum since around
Mhm.
2015. Talk about how their performances have been similar or different.
Yeah, I mean, I guess technically, if you want to say since inception, Bitcoin would have outperformed more just because its market cap is way higher. But in terms of you want to look at it from like a portfolio construction perspective, say for the past like 5, 6 years, and you just do something like a market weighted index of the two, you kind of see that the gross returns are actually very similar, but you could definitely argue that the risk are very different in terms of like what each network is bringing to the table. So even though the gross returns might be similar, the your allocation and like your risk budget would be different.
And elaborate on that. Why would talk about how the risks are different?
Well, so I mean, similar to what you're talking about with say Bitcoin, right? Bitcoin is trying to grow into a store of value, right? Is trying to disrupt that whole different, be a hedge against like sovereign debasement, that sort of thing. Versus Ethereum is trying to be a foundational asset or a foundational asset to like the internet of value. So like any sort of value that's transacting within the internet, Ethereum wants to be kind of one of the core base layers within that ecosystem. Versus Bitcoin's not trying to it's not trying to disrupt things that are happening, say, within the internet kind of technology space.
And in fact, regarding performance, you've produced a really terrific set of data. We're going to drop the link right now for everybody so that you can take a look at the performance data and a bunch of other information that Franklin Templeton has to offer. Mary Beth has dropped that for us now. There's a lot of info there. So rather than bring it up on screen, we'll let you look at it at your leisure. That link is right there available to you. Talk a little bit further. About um, the the outlook. If we can look historically, and Bitcoin and Ethereum have performed relatively similarly in terms of price performance, what's your outlook for the two of them going forward?
Yeah, it's well, I think like the similarities of both is both have become very institutional assets, right? Both have a ETF versus there's no other crypto assets have that. And that gives a lot of institutional investors the ability to kind of gain the exposure that Bitcoin or ETH would offer. If you want to look at like the fundamentals of each, I'd say it's actually very different. So Bitcoin historically has had essentially no uh developer like activity was on top of its network until about a year or two ago, where there was a guy named a guy launched what's called like ordinals theory, but basically it's like the ability for where you could launch, say, a Bitcoin scaling solution like a layer two, or even something like NFTs, which is, Bitcoin NFTs are called ordinals. So that's kind of its infancy on that side. But in terms of store of value, it's I would say it's like very late stage in its development.
So
Um,
right now, Bitcoin's got what? It's a 2-to-1 lead in terms of market cap over
yeah,
Ethereum.
roughly that's about right.
So do you expect that to persist, or do you think that Ethereum will gain market share?
I think there's a chance that Ethereum can gain market share. The the risk you're taking with Ethereum is there's all these different, say, layer twos that are built on top of it, and it's the question of uh whether like what layers will accrue the value of the Ethereum ecosystem. I think if you just look at it purely from a Ethereum ecosystem perspective, yeah, I think that could definitely surpass Bitcoin's market cap.
All right, so I've got two questions related
Hmm.
to all of this. First, does it matter? Does it, should anybody care one way or the other that Ethereum might increase its catch up in market cap to Bitcoin? Does that make any difference?
I mean, it certainly makes a difference if you have strong conviction one way or the other, because I mean, ultimately it impacts your returns,
So you
right?
would
Like,
think that if it increases its market cap relative to Bitcoin, that means its price is growing faster than Bitcoin's.
yeah, that's right.
Okay, so yes, we should care. And second, you mentioned layer twos a couple of times. I want to make sure that everybody watching this understands what a layer two is. So
Hmm.
give us the fundamental information about the difference between a layer one and a layer two and what you're referring to there.
Yeah, a layer two is essentially it's like aggregating transactions and then compressing them into, say, like this is a simplistic way, but compressing a bunch of different transactions into one transaction onto the Ethereum network. So it's simply just a scaling solution on top of Ethereum.
So in other words, some coins operate their own blockchain, other coins use somebody else's blockchain.
Yeah, that's right.
And give us a couple of examples of other coins that people may have heard of that are actually using the Ethereum blockchain.
Yeah, I mean the largest would be something like Arbitrum. Arbitrum is the largest by, total call it economic activity of any Ethereum layer two. And they have their own coin, which is I want to say it's roughly around 5 billion market cap. So it's pretty small relative to Ethereum, which is, that 2 to 300 billion range. And there's a lot of activity that happens on there, but it's nothing compared to what's happening on Ethereum on the base layer.
Yeah, I refer to Bitcoin and Ethereum as the Coke and Pepsi of crypto.
Mm,
They've got what, 70% market share these days, thereabouts. And there are lots of other soft drinks. You can go to RC
yeah.
Cola or Dr. Pepper, Mountain Dew, but at the end of the day, it's all about Coke and
Well,
Pepsi. And
Arbitrum would be like the Coke Zero.
got it.
Yeah.
Uh, that's a good analogy. That's a good analogy. All right, so we've got the two ETFs, and although people may be interested in those other coins, the fact is there are no other ETFs of any of those other coins. The only two that
Mhm.
exist today, and a lot of folks think the only two that are going to exist for a while, are Bitcoin-based ETFs and Ethereum-based ETFs. We may see some product extension. We'll get into that in a little bit. But between these two, Bitcoin ETFs, Ethereum ETFs, how should advisors be thinking about allocating? Pick one or the other, or a combination of the two? Tell us about that.
Yeah, I think the ultimate game for most people that don't have necessarily a ton of knowledge of crypto is, you want to just capture as much beta of the space as you can, because you want to capture the all the activity and growth that's happening within the crypto industry. Um, and if you allocate to Bitcoin and ETH, you capture roughly like 80%, or maybe a little more than 80% of the total market share, or the total market cap of crypto. Um, so I think that's probably the easiest, most prudent way to do it. And it shows, if you look at the portfolio construction, or at least historicals, it shows like similar returns, similar Sharpe ratios. So I think that's probably the best. But it also depends. It also depends what type of exposure you have within the rest of your
So
within
in
the
other
rest of
words,
your portfolio.
instead of trying to guess what's going to happen next, just own the market, which is pretty much of a diversification approach that is tried and true. Most asset managers these days, most advisors would argue for broad-based diversification.
Mhm.
Franklin Templeton, of course, champions that. So do the same with your crypto. Instead of trying to
Yeah.
guess, will Bitcoin beat Ethereum? Just own them both, right? That kind of what you're saying?
Well, and especially if the rest of your portfolio is constructed similarly, I mean, you could argue that you're actually not capturing the entire market because you're not owning some of the biggest assets in the world, right? It's like for whatever reason, like a Meta or a Google wasn't included in the index, you would want to make sure that that's actually included in your own portfolio.
And Franklin Templeton has something you refer to as the dynamic Bitcoin Ethereum strategy. Talk about that.
Yeah, so that one if you just want to have purely Bitcoin ETH exposure, but you want to have someone actively managing what the weights are. So it's not necessarily, just that pure beta index that we were talking about earlier, but um someone, our team making a decision in terms of like what type of active weight do you want to take between the two? Do we think, Bitcoin or ETH is gonna under or outperform the other asset?
And has that allocation attitude shifted significantly since inception?
It has changed some. It has changed some. I think when we initially launched it, we were overweight Bitcoin, particularly because the Bitcoin ETF had launched and the ETH ETF had yet to launch. Just purely in terms of institutional flows, like even if you wanted to allocate to Ethereum, you couldn't, and that would that was a good strong tailwind for why to have like uh a relative weighting more of Bitcoin than ETH.
And,
But then the Ethereum ETF launched and things have changed.
so talk about those factors that have driven changes in the way you're thinking about allocation between Bitcoin and
hmm
Ethereum.
Well, I think year to date, year to date, it's not necessarily been the fundamentals of the network that's driven the relative performance. It's been more about capital flows, right? Because we've had this like market inefficiency that's been slowly becoming more efficient, but it's the approach that they're taking has been asset by asset. So market inefficiency for Bitcoin is starting to get fixed that so people can buy it through the ETF. Ethereum didn't have that until July, and now that's starting to happen
Yeah.
for ETH.
So I think most would agree that owning a combination of Bitcoin and Ethereum probably makes more sense for most investors than just choosing one or the other. I
Mhm.
mean, there are some people who are Bitcoin maximalists. Michael Saylor is, I think, the most famous Bitcoin
He's the
maximalist.
loudest.
Yeah,
Yeah.
certainly
Yeah.
the loudest. And there are others who argue that the commercial application of Ethereum is more appropriate, more
hmm
relevant in the marketplace, and so they tend to be Ethereum maximalists. But I think most folks arguing on diversification would have some kind of combination. And there are basically three choices. One is you own Bitcoin and Ethereum equally, 50-50, rebalancing periodically along the way. The second would be since Bitcoin is 2 to 1 in terms of market cap, it's twice as big as Ethereum. That means you would really have not 50-50, but you would have 67-33. You would have two-thirds of your
hmm
money in Bitcoin and one-third in Ether to reflect the fact that Bitcoin is twice as big in market cap. And the third is a more dynamic approach where you're trying to pay attention to what's going on between the two, as you described with the dynamic investment management service that, for example, Franklin Templeton offers in addition to the two ETFs. So as investment advisors are beginning to uh, figure this out, which of those three choices do you think most folks ought to start off with?
Yeah, I think I'd start with the middle as an initial, the set call it 70-30 or 2 to 1, however you want to describe it. Um, just because I think Bitcoin's use case is clearly defined and it's very clearly the winner within its own category, right? And that's really showing up. I think that's really showing up in price and that's really showing up in like any of the headlines you see about Bitcoin. It's very clear what's happening. Uh versus Ethereum, has a lot more competitors, right? And so I think, if there was a way for you to take Ethereum plus its competitors, market weighted, that would be a great way to really bet on the growth of technology within crypto and all the economic activity that happens on it. Um, but just because of that, that strong competition that it has, I think it's probably prudent to just purely be like the 70-30 weighting.
Got it. And that I think does make a lot of sense. And the good news is we're able to do that pretty simply and easily thanks to the availability of the ETFs. We couldn't
That's
do it a year ago,
right.
but today, because of the ETFs, they're readily available anywhere. So for those who are unfamiliar, talk about the Franklin Templeton offerings with these ETFs.
Yeah, so we have the Franklin Bitcoin ETF, right? Crypto, single asset crypto ETFs, purely owns Bitcoin, and then same with Ethereum. I think the tickers are EasyBC and EasyET. So, it's easy to buy crypto, right? Those are the only two ETF products that we have that have launched. And then we have filed with the SEC a crypto index ETF that initially would only start with Bitcoin and ETH.
And that's where I think we're going to see brand extension. The SEC has said no to Solana ETF applications and others, but most folks, I think, are in the attitude that we're not going to see additional um, coins being converted into ETFs. Certainly not under Gary Gensler, and that means that while we have the Bitcoin and Ethereum, that means you're really forced to buy both. You have two different ETFs, one holding
Mhm.
each, and that means you're making two trades. You're buying one of each. You've got to rebalance between them. But what I think are going to come, as you pointed out, you've already filed for this, a single ETF that owns both of them.
Right.
And that will be convenient. Instead of having to buy peanut butter and chocolate, you can just buy a Reese's cup. You'll get
Yeah, and
them the two things.
you won't have to manage the allocations yourself or the rebalancing yourself, right? It should be a simple, easy index product similar to any like an S&P 500 ETF.
Any guesstimation on when that might come to market?
That remains to be seen. It's up to Gensler. We'll see.
Yeah, I think everybody's waiting for those kinds of products. In the meantime, I don't think you would recommend that people wait to invest in crypto for that kind of a fund, because who knows what the price appreciation might be between now and then.
Yeah. I mean,
So,
crypto's like, it's one of the fastest growing industries. There's a reason, someone like myself decided to work in it, right? I don't see any other industry that's worth working in right now.
well,
Maybe
elaborate on
maybe if
that.
I was smarter about AI, maybe, but that's probably past.
So elaborate on that, David. Why is it you're so enthused about the crypto field and diverting not just your money, but your time, your career into this?
Well, I think for one, it's like probably the most inefficient market in the world. I mean, the reason we're having this webinar is because a lot of people don't understand these assets. And so, if you really jump in to deep into the pool, at least in my experience, there's been a lot of opportunities to make some ridiculous gains, even in the top assets, right? Like even like just Bitcoin itself. Like when I first got into it, it was like, or seriously got into it was like probably 2018, 2019. And since then, I mean, Bitcoin's almost 10x higher, which you don't find in like traditional assets. Um, and then on top of the fact that there's like, and then I would also say in terms of like a career perspective, I think it's simple as, um, it's a new industry. There's not a lot of incumbents, and so for someone who's relatively young like myself, it's a good opportunity.
Right, so you raise a really interesting point there. If Bitcoin is up 10x in the last 6 years,
Hmm.
uh, last year it was up 160%. It raises the question of allocation. So we've talked about the fact that you prefer for people new to this who simply want to have an exposure to their portfolio, two-thirds, one-third allocation reflecting the market caps of Bitcoin and Ethereum. But what about the overall allocation of the portfolio itself? How much of a client's portfolio should be in these two ETFs?
Yeah, well, um, I mean, I think as much as you could handle, right? You have to remember these assets are very volatile. They're very volatile assets. So I think it's just really a consideration of how much volatility are you willing to add to your own portfolio.
So most folks who talk about it refer to low single digits,
Yeah.
1, 2, 3, 4% or so. Are you suggesting that for some folks who have a higher risk tolerance or who have a higher affordability, that they should contemplate doing even more than that?
I mean, I think if you have extremely high risk tolerance, maybe the max you probably go is roughly say 10, right? But generally speaking, I think for the average investor, low single digits would make sense. Certainly as an initial allocation. And
Mhm.
if you do think about like if the returns historically indicate any type of future returns, which maybe is a great flow, maybe you don't want to assume that, but if it was to happen, your balance, your allocation would just naturally go up over time anyway if you just didn't touch it.
Well, that raises an interesting point about rebalancing.
Hmm.
Let's look at your case. Go back to the beginning. I'm gonna, pretend. I'm not going to ask you the question because I don't want you to answer. I'm going to pretend that when you started in 2018, you had a 1% allocation in your portfolio. And if you never rebalanced over the last 6 years, since Bitcoin is up 10x, that means your 1% allocation is now 10% of your portfolio, assuming no rebalancing. So, would you suggest that people should rebalance along the way, or do you let it ride on the attitude that you're on the hope that it's gonna grow so outrageously?
Hmm. Well, I think it would be prudent to have, say, a max allocation that you're willing to have. So if you start with that 1% and it gets to 5%, then in that kind of scenario, it's like, okay, now maybe you need to cut this back down because it's become too much of your portfolio, and the volatility that your crypto position adds uh could potentially be too much.
Yeah,
Especially you think about whenever that happens, maybe your risk tolerance has changed by then too, so that's another consideration.
yeah.
Um,
And the
but
one percent you
I wouldn't be
invested.
doing it on like a monthly basis.
Yeah, yeah, I get your point. In other words, a 1% allocation might not have translated into very much money, but a 10% allocation is a lot of money.
Right.
And yeah, and it's that old adage, bulls and bears both make money, pigs get slaughtered. So let's not get greedy. Let's not, get crazy about this. I think that makes a lot of sense. We've got lots of questions from folks who are watching this. Let me try to pour through some of these for you. This first question pertains to the institutional investors, noting that they are now beginning to enter the crypto marketplace. We've got endowments and pension funds, hedge funds, family offices, sovereign wealth funds, you name it, all engaging. The major brokerage firms are now opening their doors to crypto, Morgan Stanley famously first. So the question is this, relative to that, what will this increased demand impact the price of Bitcoin and Ethereum?
Yeah, I mean, I think we've kind of already seen that, right? I mean, all the amount of flows that we've had in the Bitcoin ETF, I think that's directly impacted the price of Bitcoin, right? And if we continue to see a lot more flows into those ETFs, um, I think it's a difficult world to see where Bitcoin's price is down, but flows in the Bitcoin ETFs are up a lot.
So it raises the fundamental issue of supply versus demand, right? I mean, and so let's
Hmm.
elaborate on that because Bitcoin has a fixed supply. 21 million coins will ever only be created. 19.4 million of them so far are out there. Um, Ethereum, on the other hand, doesn't have a fixed supply. So talk about the contrast between Bitcoin and Ethereum in terms of supply demand.
Yeah, so you're right about Bitcoin, right? It has roughly 19.4 million are circulating, and then it goes to 21 million uh, once it's run out of all its block rewards. Ethereum is a little more unique. It has a more of a programmable, say, gross inflation. That's, right now it's roughly called like 70 basis points or so. And that does vary a little bit depending on certain factors within the Ethereum network around staking. But also it has a burn mechanism associated with network activity. So like roughly right now, about 80% of all transaction fees on Ethereum are burned.
In other
And
words,
burned means
the
like
the
it's like a
coins are
stop.
being Go ahead, explain that.
Yeah, it's a burn is it's kind of like a stock buyback. It's taking coins out of the circulating supply.
So it's kind of weird. Bitcoin has a fixed supply, Ethereum has almost a declining supply. In other words, in both cases, the increased demand will can be expected to translate into an increased price.
Yeah,
So the
that's
the
right.
real question for investors, will there be increased demand and for how long? How much and for how
Right.
long, right? That's
The
what it comes down
demand
to.
has a direct result or direct impact into the price of the token itself.
And that relates to the next question from one of our attendees. Can Bitcoin survive long term if all it is a store of value? Because Ethereum is much more than a store of value. It has
Hmm.
practical application in commerce. But can Bitcoin survive long term?
Uh, yeah, the comp to Bitcoin would be gold, and gold's been around or it's been acting as a store of value for say 5,000 years. Uh, so I would think yeah. I mean, the big question with Ethereum with Bitcoin is associated with uh the block rewards running out, and eventually, there's this issue of around call it what they call economic security. Uh, but really, I think once that comes to roost, it's really gonna be about have governments around the world accepted Bitcoin as a reserve asset within their central bank. Because I think with Bitcoin, that's the ultimate game. And once you reach there, then economic security is not really an issue because each government itself is reliant on Bitcoin remaining decentralized.
You mentioned earlier that for somebody with a really high risk tolerance, maybe
Hmm.
go up to as high as a 10% allocation. That generated this question. If an investor has a 30-year time horizon, would you recommend an even higher allocation than 10%?
Uh, does 30 years, does that directly result in a higher risk tolerance? Not necessarily, right?
Good
Not
point.
necessarily. But I mean, 30, like a very long-term investor could definitely withstand probably, I would think would be able to have higher allocations than someone that has a one. Certainly if you have like a 1 year time horizon, crypto is going to be it's going to be a tough bet because of how volatile it is. But 30 years, you can certainly increase your allocation.
We haven't talked about the two elephants in the room, but our listeners did. First, the Fed. Um, Everybody's expecting the Fed to cut rates pretty soon. Will those Fed fund cuts affect crypto?
Well, I think it certainly would impact Bitcoin, uh, and not necessarily in the short term, right? I don't think, hey, the Fed's going to cut 50. Right now, the market's pricing in 50 basis point cut. Uh, that's not going to have a direct impact to the price of Bitcoin, but it certainly shows that we're trending towards like a monetary easing cycle, and historically, that's been very good for Bitcoin and just crypto broadly. So.
So either no impact or a favorable one, in your view.
Well, I think it depends on your time horizon in terms of your investment horizon when you think about that. If you have like a 1 to 2 year view, it certainly has a big role to play. But if you're talking month to month, I don't, that's not necessarily the case.
Okay. And the other, of course, big elephant, the biggest of all, the upcoming election.
Hmm.
Do you see any impact or what a differing outlook if Trump versus Harris wins, vice versa?
Yeah, I mean, it's what we've been talking about earlier with ETFs, right? Like um, I think it's a very different world in 2025 for institutional crypto between Trump and Harris, right? If Trump wins, uh, I would think that Gensler's probably gone. We'll see. Um, but it's
Well,
certainly going to be
Trump has
more.
said he's going to fire him on day one.
Yeah. Well, there you go. So, and in that world, you can imagine a lot more crypto ETFs, right? Maybe the next couple of ones. We've seen someone file for a Solana ETF, and then like who knows what could be next. But certainly you're going to go down the risk curve in terms of crypto assets that get included in either like a crypto index ETF or just single asset ETFs.
So you're suggesting that crypto will fare well in a Trump administration. How about a Harris administration? Will crypto do well, or will it do poorly, or neither of the above?
I think I think it will do well, but it'll be muted, right? It's going to be harder to do institutional crypto in the US. But
Kind of
crypto is
like
a
where we're at now.
yeah, it's I think it's just going to be more of what we've seen. So there's going to be some activity in the US, but really I think a lot of the growth will happen globally.
Got it. Do you expect that there's going to be a crypto question in the debate tonight?
Mm, I don't know, but you could probably make that bet on Polymarket if you wanted to.
I'm sure you're right about that. I'm skeptical. I'm a little. I think there are more important issues
Yeah.
that
I
they're
don't think
focused on.
Harris would want to talk about crypto. I think for right, her platform has nothing to do with that.
Yeah,
Um, so
yeah.
I would
I
think
think
not.
I think there are bigger issues for them to be
Yeah.
emphasizing than crypto
If
tonight.
Bitcoin was at all-time highs, I'd think yes.
Mm. Here's a question, a little bit long, but a really good question that might be on everybody's minds. I'm having trouble understanding the value proposition of Ethereum. It seems like they market the ability to execute third. Let me say it again. It seems like they market the ability to execute smart contracts without a trusted third party. But the Ethereum Foundation is the trusted third party with control over Ethereum supply. Am I incorrect, or is there another reason we should take a look at this for our clients?
Yeah, that's an interesting question. Um, I think I would start with, Ethereum supply is programmed into the network itself, right? Like everyone can run a validator, and you can see for yourself how supply is determined, or the inflation of Ethereum is determined. Um, it's programmed in. Uh, but certainly the Ethereum Foundation has a big influence in terms of any changes that might happen. But that being said, it's not that if you run your own validator on Ethereum, you don't have to accept any of the changes that the Ethereum Foundation proposes.
Yeah, I would agree with you. I don't think that the Ethereum Foundation's role as a centralized functionality has the impact that Apple has over smartphones. So
Right,
I think there's a pretty big difference there.
right. It's not like Tim Cook can just call and, hey, we're gonna change this. We're gonna add this backdoor to the iPhone or whatever.
Yeah,
It's definitely more community driven in terms of any changes that happen on the Ethereum network.
yeah. Is this an appropriate investment for a retired middle income investor?
Well, if you size the investment appropriately, I think why not, right? I mean, maybe it's not single digits in that scenario, but it really depends on what your financial position is and your risk tolerance.
Yeah, I would argue that for pretty much any investor, as long as they have a relatively long time horizon, not a month or two or even a year or two, but if they're looking out 5 years or more, I would think a 1% or 2% allocation can cause minimal damage. I mean, so what if it
Hmm.
blows up and becomes worthless? It's instead of a dollar, you have 99 cents. It's not going to irreparably harm you. But if there is outperformance in the future, similar to the outperformance of the past, this could have a material improvement on your overall portfolio. So I would think for even a retiree, someone in their 60s or 70s, or someone even in their 80s who's looking at legacy for children and grandchildren, I don't see the harm in a 1 or 2% allocation. It's just part of the diversification model. If you're willing to own stocks, why wouldn't you be willing to own crypto?
Well, if there's any corollary, I got my grandmother to buy the Bitcoin ETF, but it's sub 1%.
Do you, uh, I'm just looking through the questions. What is the chance that future regulatory policy will neuter Ethereum's use case and therefore its investment proposition?
Could you repeat the first part of that?
Sure. What is the chance that future regulatory policy will neuter Ethereum's use case?
Mm, well, I think that goes back to the U.S. versus global. We're seeing a ton of development that happens outside the U.S. on the Ethereum network. Uh, so I think, it could certainly hamper the growth, but it's not, I don't, it's not gonna kill the network by any means.
And I think we also have to remember that this is a global asset. We tend to get
Mhm.
caught up here in the US and arrogantly so, rightly so. We are the world's biggest economy by far. We have a big impact on the price of financial assets globally, but at the same time, crypto is a global asset. If there's a change in the regulatory regime in the US, that's not going to have an impact on the use of Ethereum around the rest of the world. Um, so I think we need to keep that perspective in mind. Do you have a thought on that?
No, I would agree. I would agree. I think as long as there are countries that allow any sort of crypto activity, those countries should I would expect that the activity within those countries around crypto to continue to grow, right? Like if you believe, or at least we certainly believe that there's a lot of value. There's a lot of value of these crypto assets in terms of like just using their networks, not necessarily owning the asset, but just using the network, which is why we're involved on the tokenization side.
Mhm.
Um, if you believe there's a regulatory regime that is favorable towards that, like it's certainly this this industry would thrive under that regime. And
Yeah,
given their global assets, that should thrive in any of those
yeah.
different. Yeah.
Uh, so we all know the fundamental difference between buying uh, Bitcoin or Ethereum directly versus buying Bitcoin and Ethereum through an ETF. The single biggest difference is that the ETFs are securities and they trade only during market hours, whereas the coins themselves, if go to Coinbase or wherever, you can trade 24/7. But aside from that, Bitcoin versus a Bitcoin ETF, there's really not any material difference. But with Ethereum, there is one basic difference. Uh, when you buy Ethereum directly, you can stake it. You can't stake the Ethereum ETF, and in the Ethereum ETF, the SEC doesn't allow the ETFs to engage in staking. So I want you to do two things for us, David. First, explain to everybody what staking is and why this is an issue. And then I want you to explain why the SEC said no to allowing the ETFs to engage in staking. So first, what is staking?
Yeah, so staking is it's the means that a network such as Ethereum secures itself. Uh, and the way that that is implemented is through uh, people that are owning that own ETH. They stake, or in some sense, like they lock up their ETH, essentially as collateral to secure the transactions that are happening on the network. But in exchange, you earn the staking rewards, right? And so Ethereum, the only inflation that happens on the Ethereum network is through staking rewards.
And that staking reward is more Ethereum. So by
Yes.
posting, it's kind of like I'm going to give the bank my money and they're going to pay me interest in the form of more money. Um,
Yeah.
Kind of similar. But you can't the ETFs cannot engage in staking. The SEC said no, we're not going to let the ETFs stake their ETH. Why not?
Well, I think their view is that when you add yield to the ETH asset, you're you're potentially turning it into a security, right? And the SEC hasn't really been willing to label um, ETH as a security or not. So there's a lot of regulatory uncertainty around the asset,
Got it.
specifically around staking.
So this is perhaps the most important difference, in my view, between Ethereum and an Ethereum ETF. With Ethereum, you can stake it. With Ethereum ETF, there is no staking. So let's now talk about whether that's a big deal. What are the yields? If somebody were to stake their Ethereum, how much might they expect to earn on an annual basis from staking rewards?
Yeah, so right now it's around 3.5% yield. And that's currently with I think roughly 30% of ETH is staked. Um, but I think really, if you want to think about it from the ETF perspective, really you're experiencing inflation, right? You're experiencing the inflation of the Ethereum network, which is not going to be 3.5%. It's going to be roughly, I think it's roughly like 70 basis points annually. So your cost on the Ethereum network is, you're essentially being diluted 70 basis points every year.
So are you netting out the 3.5% minus the 70 basis points?
Well, no, so inflation on Ethereum network is roughly 70 basis points, but
Hmm.
only 30% of ETH is staked earning the 70 basis points. So really it's 70 divided by 0.3.
Got it. In other words, the staking doesn't strike me as all that big a deal.
Yeah, it's not, it's definitely additive. It's good, right? It's part of if you're passive, it's part of the Ethereum network, so it's good to do. And why wouldn't you take a yield it's essentially the risk-free Ethereum yield.
Hmm.
Um, but it's not that big a deal when you think about like what type of growth rates you're expecting
Right.
or type of returns you're expecting for the asset.
Yeah, I mean, if you're going to own ETH for 10 years and you're earning a yield of 3% a year over 10 years, that's a 30% increase. You'll increase your value by a third in addition to the price appreciation. But if the price appreciation is 10x, like you expressed over the past 6 years, if I've got a 10x increase, do I really care about that 3% per year staking reward?
Right. It's not
It,
as
you know,
it doesn't matter as much.
yeah, it's not as big a deal. So allow you to decide, do you want to stake? Because if you want to stake, you're going to have to open a Coinbase account and go through all that exercise, incurring, by the way, the commissions for buying Ethereum on a platform like Coinbase, which is radically higher. Well, you didn't talk about that, so do add that in. What is the cost of the Franklin Templeton Bitcoin and Ethereum ETFs?
Yes, they're both 19 basis points. Their management fee is 19 basis points annually,
Which
right?
is the lowest in the industry. And you compare that to Coinbase or Kraken or other sites where you can pay 1.5% to buy, another 1.5% to
Hmm.
sell. So, 150 basis points, total of 300 basis points round trip, as opposed to just 19 bips in the ETF. So the ETFs are clearly radically less expensive, the cheapest way for most folks to engage in this. Chris asks us, how safe is all of this from being stolen? Um, Talk about the risk, because we all hear about crypto hacks. The FBI just came out
Yep.
with a new report that said consumers lost a couple of $billion last year to crypto fraud. So talk about that.
Well, or specifically our ETFs, they are custodied with Coinbase custody. So really the risk of the assets being stolen is, how secure is Coinbase custody, and they're certainly one of the best. They're certainly one of the best in the industry.
Matthew is challenging something I said when earlier on this in our webinar when you were uh, playing around with your microphone. I explained the difference between Bitcoin and Ethereum, and I said that the Bitcoin was invented as a goal to be a replacement digital currency, and that experiment largely failed because Bitcoin is so volatile. It really isn't as useful as a currency. Matthew doesn't agree with me. He says, to the contrary, we're seeing more and more adoption as a currency of Bitcoin worldwide, such as like El Salvador, where Bitcoin is legal tender. What's your view on Bitcoin as a currency?
Yeah, I actually think that those two views are both right to some extent. And what I mean by that is that Bitcoin has not necessarily failed as a currency globally, but it's certainly growing into one. And any growth asset or any asset that's on an adoption curve is going to be way more volatile than one that's in a mature state. So, um, certainly if the volatility of Bitcoin was to persist long term, could be an issue for it to become, a currency around the world. But as long as it's in its growth phase, I don't really see the volatility necessarily being that much of a problem.
Uh, you mentioned earlier an allocation to crypto somewhere between 1 and 10%. Only
Hmm.
if you're really aggressive should you be at the high end of that scale with a really deep risk tolerance. Uh, Elaborate more. One of the questions is how often and what would be the thresholds for rebalancing?
Um, well, I think like in say like our active SMA strategy, that's something that we look at kind of on a quarterly basis. So, if you wanted to be a little more have a little more management around your allocations, I think, quarterly is probably fine. I wouldn't do any higher frequency than that. Because you do want these assets to kind of work for you before you start uh, basically becoming an active manager.
Yeah, and also if you're going to rebalance too often, you're going to just pound yourself with taxes.
Yeah, and you're going to be looking at the market too much. If you look at the market too much, it's going to take hold of you.
Yeah, so buy Bitcoin, buy Ethereum, and then go watch football.
Well,
Uh,
certainly in the fall, yeah, absolutely.
are you able to? This is Cole's question. Are you able to engage in tax loss harvesting using these ETFs?
I don't believe so. I wouldn't say I'm that knowledgeable on specifically how ETFs work to really be able to answer that question.
So I'll answer it a little more broadly. As part of a broad portfolio, I'll say yes, you can certainly do this. Inside the ETF, no, because it's a single asset ETF. But if you own a whole bunch of ETFs, you can engage in tax loss harvesting the same way you can any other ETF. Same thing with dollar cost averaging and rebalancing. In other words, an ETF's an ETF. It doesn't matter that this ETF is holding Bitcoin, other ETFs are holding stocks. So yeah, just talk to your financial advisor or your tax advisor about more on that. And this question is Franklin Templeton allocating Bitcoin or the Bitcoin ETF into any of their other mutual funds or ETFs? So
At this time, we have yet to do so.
any plans, do you know?
I don't know.
Um, how can investors protect themselves from another FTX type of fraud?
Well, I guess in terms of price appreciation or downside risk, that would be a bit difficult. But certainly in terms of like where you hold your assets, that has a big impact. Being able to hold it in the ETF format, that also comes with all the regulatory certainties around ETFs, how they're custodied and that sort of thing, versus, if you hold it at a FTX or a centralized exchange, you are taking centralized exchange risk.
So give me a final comment here, David, of that's my dog in the background, of a fundamental message you would like to leave with investment advisors and investors about these two ETFs.
I think one is, getting off of zero is really important. Um, it's an extremely fast growing industry, and trying to capture just a material amount of that market beta, I think was really important for majority of investors. Um, and then, thinking about which one to own, it's a function of what type of portfolio construction you already have. But um, each has their own use case, and each is trying to mature within their own call it product market fit.
Yeah, I think that the two, although they are both crypto, both ETFs, they are, I think, pretty radically different in terms of their
Hmm.
application in the marketplace and from an investment perspective. So I share your view of if you're going to do this, owning both, to me, makes a lot more sense than owning just one or the other.
Yeah, absolutely.
This has been really terrific information, David. We have 4 additional webinars coming up, including tomorrow, September 11th. The rates are about to drop. What does it mean for your bond portfolio and your bond allocation and your cash allocation? We're going to tackle that with PIMCO. Friday, September 20th, what you need to know about the outlook on crypto, 20 terrific charts to help you understand what's going on. On Wednesday, September 25th, unlocking alpha in crypto, going beyond the ETFs and the coins directly to the equities, companies that are in the crypto marketplace that are publicly traded stocks. We're going to talk about those on September 25th. And then on October 9th, yielding, staking, lending, and custody to go beyond the ETFs. There's so much in the world of crypto. We're bringing you lots of ETFs, lots of conversation to help you figure all that out. And if you want to really dive deep into the comparison of all of these, I encourage you to download our Bitcoin ETF toolkit and our Ethereum ETF toolkit. The QR code is right there, and lots of content, educational information, infographics, videos, audios, white papers, articles, and cool, quick one-page comparative charts so you can easily compare these different ETFs to each other. All of that available at DACFP.com. And if you really want to become fluent and proficient in this subject, you need to get your CBDA designation. This is a certification that is listed on FINRA's database of professional designations. Becomes certified in blockchain and digital assets, an online self-study course with a world-class faculty. You'll get up to 18 CE credits. Half the course is on the tech, the other half all on practice management, portfolio construction, regulation, operations, crypto taxation, how to add it to your practice simply and easily. 5 different tracks, one for advisors, another one for home office professionals, one for investors and consumers, even one available to folks around the world. 37 countries we now have had people taking this course from. And I encourage you to tune in for my daily podcast, The Truth About Your Future, everywhere you get your podcasts. And be sure to pick up a copy of my Amazon #1 bestseller, The Truth About Crypto, as well, to give you the information you need about this subject area as well. David Alderman, Franklin Templeton, Digital Assets, thanks so much for joining us on this webinar today. Great content, great info. And I think a lot of folks are going to be reaching out to Franklin Templeton to learn more about accessing your Bitcoin and Ethereum ETFs. Thanks, David, for joining us today.
Thank you.
Thanks, everybody.
Bye.